Safaricom, Kenya's top telecoms operator, reported a 113% jump in first half pre-tax profits, driven largely by increasing customer numbers and its money transfer service. The company, which is 40% owned by Britain's Vodafone, said the revenue for the period to September rose 19% to 59 billion shillings. Joining us on the line for more, Bob Collymore, CEO at Safaricom. Bob, thank you so much for your time today. So really impressive set of results. The market impressed by them. Talk to us about, the voice side of the business there. You saw revenue up 19%, non-voice service revenue up by 28%. But you talk about these damaging price wars, of course, well documented. But to what extent have you been able to protect your market share in spite of them?
Well, our market share, the last CCK, which is the regulator's report, suggests that our market share has now dropped back to about 64%. But given that we are charging, an average of 4 shillings a minute, and our competitors are all charging less than that, it would suggest that our revenue market share has actually increased. And we estimate that to be higher than 80% at the moment. The other thing to bear in mind is that we've grown our customer base by about 1.2 million people over the last year.
And you also talk about the fact that you've had promotions. Does this mean that you really had no choice but to follow the herd and go ahead with price cuts in order to kind of ensure that you continue to grow your customer base?
Well, we did at the beginning. We followed suit. So a couple of years when I first came, the price came down to 3 shillings, and we went down to 3 shillings. But after a while, we figured out that this was really not sustainable because it was below cost. So we took the bold step about a year ago, at the beginning of October last year, to bring the price in line with what we think is a more sustainable level. So we did that, and it's paid out for 2 successive quarters. 2 successive half year. So the last half of last year, we started that recovery, and I think this half we've shown that we've put the price war behind us.
And of course,
the customers are interested in other things. It's not just about price.
Yeah, and also I'm just looking at the offerings when it comes to data. You talk about it being the next growth frontier. I mean, just looking at the earnings coming through there, up 30%. Rather, data revenue up 30% to 4 billion shillings. That, of course, comparing to almost 60 billion shillings in the voice side of the business. Tell us about what you're doing here to ensure that you create more 3G access for the population. How much money are you putting into the data side of the business?
Well, there's a couple of things we're doing. The first is we are going to start to roll out our own fiber because we find that fiber is unreliable and actually very costly to lease. So we have started a fiber program which we recently placed contracts for. We'll roll out about 500 kilometers a year. And the second thing is we're really going to drive the adoption of smartphones. And so today we announced that we'll have a smartphone which will be 20% or so cheaper than anything else in the market. And I think the cheapest smartphone in the market, which is a touch screen smartphone, is about $90 US dollars. So we're likely to be coming in at about $60 to $70.
Who are you partnering with for that when it comes to the hardware side of that?
Well, we take a range of handsets, so the usual Nokias and Alcatels and things, but we also use Huawei, who is one of our infrastructure vendors, and we're looking at Techno as another vendor for this market.
I mean, 5 years down the line, what are your thoughts in terms of the split between data revenue and voice revenue right now? Because, as I said, voice is still the key cornerstone of the business at this point.
And voice has still got a lot of life left. Kenya is a market which really only has 6 to 5% penetration, so there's a lot more penetration to go. But at the same time, we have things like M-Pesa, which is buoying up our non-voice revenue. So M-Pesa continues to grow, and we've seen significant growth in the last half year. We've seen a 25% growth in the last half year, and so we think that there's a lot more. We have more years, many more years, before we can see non-voice overtake.
Does Safaricom have, regional plans in order to tap into markets where you perhaps don't have as much of a dominance right now?
We don't like the word dominance, but right now we think...
Or leading position, I'd rather say.
We think we've got our hands full trying to serve the Kenya market, so there's no regional plans just now.
Just interesting when you talk about, M-Pesa, just looking at that part of the business. I mean, the overall payments made there equating to around 31% of Kenya's GDP. So how do you grow M-Pesa from here? Is it just, reaching people who are not already using the service or expanding the type of services? Just talk to us about what's next for M-Pesa.
It's expanding the types of services. We've got about 15 million customers, which is quite a large percentage of the adult population, given that the adult population is probably only about 18 or 19 million. So we believe that if we can move our customers from using about 5 transactions per month, if we can increase that by 10 or 15% by doing other things. So today you can pay hospital bills, you can buy stuff in the supermarket. So we just want to really extend the use. It has pretty much become a part of everyday life. And we think if we can deepen that, then we can deepen the stickiness for customers and then, of course, continue to grow our revenue base.